Hi, this is Richard Schodde. I'd like to thank the organisers for the invitation to speak at this conference. What I'm going to do over the next 15 minutes is give a very high level and quick pass assessment of the exploration and discovery performance for Australia. I'll also briefly cover some of the other countries as well, just to put some context on the story. I'm going to cover 6 or 7 items. I'm going to talk very quickly about the trends in exploration expenditure around the world, then zero in on what's been happening in Australia in terms of exploration expenditures. Then I'll talk about the location and number of discoveries that have been made. And when you combine the assessment of how much was spent and the value of the discoveries made, you can come up with an assessment of the value proposition for exploration. Does it make money or lose money? Then I'll use that as a basis of comparing Australia against the rest of the world, looking at countries like Canada, United States and elsewhere. And I'll conclude my very short presentation with my call on what the impact of COVID has been and the medium to long-term outlook for exploration activities and expenditures here in Australia. So with no further ado, I'll get into the meat and potatoes of the story. Over the last 40 years or so, exploration expenditures have been quite volatile, and they peaked at nearly over $35 billion in 2012 in today's dollar terms, before dropping by a factor of 2/3 down to less than $11 billion in 2016, and have rebounded slightly to about nearly $12 billion in 2019. The 2020 numbers obviously will be down a little bit, and I'll talk about them in a minute. You can see from that the two major commodities of interest to the exploration industry are gold and base metals. They account for 2/3 of all of the exploration activity done in the world. And if you look at the countries or the regions that happens in, you can see very quickly from that the dominance of the more traditional countries of Canada, Australia and the United States, followed by Latin America and elsewhere. Countries in red are the former communist countries of China, former Soviet Union and Eastern Europe. So if we look a little bit about that on a normalized basis, you can see that there's been quite significant shifts in the regional focus of exploration activity. If you zero in on Australia, you can see that after 2 years of progressive decline from 23% back in 1993 to a low of 8% in 2015, we've actually increased our expenditure or doubled our expenditure in the last 4 years. So the decline here in Australia is actually reversed in absolute terms, or in relative terms, sorry. So Australia accounts for about 16% of the exploration spend at the moment, but if you actually take it the average over the last decade, it's about 11, 12%. In terms of what's been happening in Australia, we had a similar sort of boom in 2012, but it was actually driven by a different set of circumstances. The majority of the growth in the industry actually occurred in the bulk minerals, coal and iron ore in particular. Those things have obviously stepped back with lower prices and a better resource position by the major players. But it's interesting to see that in the case of Australia, gold and base metals expenditures in 2019 were actually near an all-time high. So that part of the exploration sector has actually been experiencing some very strong growth and good employment. So the numbers in absolute terms are down, but there's been a change in the mix. If you look at the expenditures on a state-by-state basis, and these numbers come from the Australian Bureau of Statistics, you can see that by the lion's share of exploration activity in Australia is in WA, accounting for nearly 58% of total exploration spend over the last decade. Coming back to places like Victoria and New South Wales, you can see that over the last 4 or 5 years, their share has grown relatively significantly at the expense of South Australia, Northern Territory and Queensland. So you're starting to see some sectorial shifts here in Australia as well. That's driven by the commodity mix and local politics and access to ground, etc. Also the opportunities that come from exploration success in places like New South Wales and Victoria. In terms of the number of discoveries that are made, if you look over the last 40 years, Australia accounts for about 18% of all mineral discoveries in the world. This chart here shows that general trend. You'll also see that on average about 100 discoveries are made each year. That's about 2 a week. It's a pretty amazing statistic when you think about it. And of that, around about 18 per year are in Australia on average. This chart suggests that there's been a structural decline in the industry in the last decade, but that's more an artifact of how you collect the information. It's important to recognise that it does take time for companies to drill out and report their recent discoveries. So I've made an estimate of the likelihood of new discoveries being booked, and that's the grey bars there. But even with that, you can see there has been a decline in the level of discovery rate in recent years. Not as bad as it first appears. In terms of the commodities here in Australia, you know, the major commodity of interest is gold, followed by base metals. Obviously, the iron ore and coal had a good run up in the early 2000s, and in the distant past, there were a number of uranium discoveries as well. This shows the size and location of discoveries made in Australia over the last decade. You can see that all states, with the exception of Tasmania, recorded a number of discoveries. Queensland's mainly been in the bulk mineral side of things. WA is a mixture of everything, and South Australia is base metals, and Victoria has mainly been gold. The bubble size refers to the size of the deposits: major, giant, and moderate. A giant deposit would have something like 5 million tonnes of copper or 6 million ounces of gold in it. Refer to my previous presentations to get a feel for what those numbers really mean. 168 deposits were found in Australia over the last decade. 10 were giants, 45 majors, and 113 moderate deposits. But you should also recognise that it does take time for deposits to be recognised, discoveries to be booked. And I'm estimating that there's probably another 40 or so deposits that will come on board in the next few years as we get more information on them. Of more importance to the industry is what's happening in terms of the value of the discoveries being made. Most of the value is associated with the tier 1 and tier 2 discoveries. These are the company making deposits or mines. And this chart here shows the bubble size. The really large bubbles are the tier 1s, of which there are only 3. And the tier 2 deposits are the next size down. There was a total of 3 tier 1s made in Australia in the last decade, plus an additional 10 tier 2s. I won't run through them all, but the 3 tier 1 deposits that were found were all found in the same year, which is 2016. 2 of them were associated with lithium. That's Wodgina up in WA in the far north, and Earl Grey in southern Western Australia. The Swan deposit, which is actually a brownfields discovery, an extension to an existing Perseverance mine, was also found in 2016 in Victoria, and it certainly generated a lot of excitement here in the state. Tier 2 discoveries, there's a number of those here, and I won't run through all of the numbers. There are a number of tier 3 deposits, for example, Rio Tinto's discovery in WA, and also there's some really interesting, exciting stuff like Boda in New South Wales that I haven't booked as a tier 2 yet, just because I haven't got a published resource on them. But so I expect that those numbers will, we'll get those projects will get upgraded over time as we get more drilling results on them. Combining the two stories together, that is how much money was spent and what was the value of the discoveries, you can come up with the value proposition for exploration. This chart here summarizes the number of significant tier 1, 2, and 3 discoveries made in Australia. And you can see from that the tier 1s are relatively rare. Like I said, only 3 were found in the last decade. It's interesting to note in the world, only in the last couple of years, there has been no tier 1 discoveries reported in the world. You can assign a value to the tier 1, 2s, and 3s. They're fairly approximate, but you can see from this chart here that majority of value is attached to the tier 1s and 2s. And if you sort of add up all of those numbers and then compare it to the industry was generating a lot of wealth. It's only in the last decade that it actually destroyed value. There was a pickup there, free tier one discoveries that were made in 2016. On average, for every dollar we spent in the last decade, we only created 72 cents worth of value. That number will improve as we get more information and projects get drilled out. So how does Australia compare against the rest of the world? Australia spent $23 billion over the last decade in US dollar terms. That's 12% of the total spend. We found 15% of the deposits of significance. We found 15% of the tier ones and twos. We found 17% of the value and created 72 cents in the dollar for every dollar spent. That's actually much better than the global average of 49 cents or 0.49. And it's better than all of our major peers except for Africa. Africa was the only country that performed better in terms of exploration performance. So what's the outlook for Australia's exploration sector? We've gone through some pretty tough times. I keep track of the junior sector, and I take a sample of over 360 junior companies over the last 30 years. And I look at how much money was spent on exploration and development and how much was spent on admin staff. These numbers come directly from their quarterly reports. And when you look at that, you can see that there's been quite dramatic changes in the amount of exploration spend quarter on quarter. And if you zero in on what's happened in the last 12 months or so, particularly with COVID-19 hitting the country in the first quarter of this year, total expenditure that we have actually bounced back. We're now up 20% over where we were in the previous quarter. So I view this as a positive that we now see the turning and that we get out in the field. And more important is live and die on their cash reserves if they can't raise their reserves. So I view that as another positive indicator that the outlook for the junior sector, at least, and the sector in general for Australia is pretty positive. And then this is my sort of near final slide. If we're talking about the forecast over the next few years, using some fairly conservative views on commodity prices going forward from Consensus Economics, Australia's exploration expenditures are going to modestly rise over the next decade. Sure, 2020 will be less than what 2019 was, but I view at the very least we'll be growing by about another 5 or 10% over the next few years. So in conclusion, global exploration expenditures dropped by 2/3 since 2012. Australia accounted for 12% of global exploration activity and 15% of all discoveries. And we have done fairly well. In the last decade, 168 significant discoveries were made here in Australia. More will be booked as we get more knowledge on them. 3 of those deposits were tier 1 with a further 10 tier 2s. Although expenditures outweighed the value created in the last decade, Australia's discovery performance relative to its peers has actually been very good, quite positive, and I'm sure the numbers will improve as we get more information and as some of the tier 3s get promoted to tier 2s and tier 2s to tier 1s. The impact of COVID-19, in my view, is short-term only. We're starting to get out in the field here in Australia and get back to work. There are a number of exciting discoveries being made in WA, New South Wales and Victoria that just only stimulate the industry. So I see the outlook both in the short to medium term and also the long term as being quite positive for the Australian sector. So that completes my presentation. If you want a copy of this presentation and other similar ones, please go to my website here and you can download it and read it at your leisure. Thank you very much for your time.